The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Hello, this is the COB, all the stuff you need to know about the day in business and markets. I'm Juliette Sali.
And I'm Danny Akuye.
All right, let's see where we are checking in as we close out Wednesday. It hasn't been a great day. I think we're at a fresh 11-month low on the ASX 200, Danny. The CBO 200 down 10 points or 0.8%. Just watching before, Qantas shares were slipping below $5, so a lot of weakness out there. Let's talk about what we've been kind of seeing in terms of, I guess, what's been moving markets, and it really was that JOLTS data.
Yeah, JOLTS data, which seemed to be stronger than expected, and I believe they revised up the previous numbers as well. And it's really interesting though, because I was reading a tweet from David Rosenberg, who's one of my favourite economists, and he just made the point that the percentage of people that contributed to the results wasn't that large. But of course the JOLTS market data moved the mighty bond markets, and yet again these bond yields are causing a repricing of asset classes across the board.
Let's just bring that up for our viewers as well, what we've been watching today. So we mentioned JOLTS, we've got bond yields, and of course the ASX route extending as well, and the RBNZ holding.
Yes.
And I think Capital Economics, among others, said, you know, we're at the peak now for the RBNZ.
Oh, that's really interesting, because the other day when I spoke to Paul Bloxham from HSBC, he's looking for one more hike, but of course they had the election next week, so it wouldn't be great to have a rate hike just before the election.
All right. Well, we'll move on from the three themes and turn to some of the news that we've been watching as well from Platform X. And this tweet, or X, I don't even know what you call them these days, but renowned American investor Jeffrey Gundlach is saying, buckle up, Danny.
Yeah, absolutely. And he's just basically talking about that bear steepening when he's talking about the yield curve is de-inverting very rapidly. Was at minus 108 basis points a few months ago, now at minus 35. Should put everyone on recession warning and not just recession watch. If the unemployment rate ticks up a couple of tenths, it will be a recession alert. So buckle up, as I say, be alert, not alarmed just yet.
I believe it was a former Prime Minister that first coined that, wasn't it? Wasn't that during after September 11?
I can't remember.
Something
yeah,
like
I wasn't here then. I was over
yes.
in London,
yes,
so no doubt we had other expressions.
On the television all the time. All right. Well, of course, anything to do with bond yields flows through into tech. We saw tech get whacked in the US. Let's have a look at our tech stocks.
Yeah, actually a bit of recovery today. That's interesting. Technology one, and apparently Altium are green today. So it might be some bottom fishing already coming into the market. I'm just double checking. Yep, that is correct, which I thought was quite interesting.
Yeah, and Block, of course, had that downgrade from Citi, or its price target cut down 2.7%. All right, let's have a look at the banks. Also rate sensitive, what we're seeing in terms of those.
We've got utilities.
Utilities also rate sensitive.
Yes, utilities first. Just worth noting that they did bounce overnight in the US. Now they have had an absolutely dreadful performance. Some of them getting whacked by downgrades, repricing, but we are seeing some bottom fishing in there. And I think then we can check in with the banking sector and see how the banks traded today. No, there we go. Banks are pretty much profit taking across the board, with both ANZ and Macquarie Group being sold down the most on that one. And let's have a look at metals and mining and see how they are going. Some buying coming back into the golds, Jules. So Newcrest up 0.25%, and also some buying in Rio Tinto. Looks like the markets may have staged a little bit of a recovery towards the end.
Evolution as well rose today after that heavy sell-off. Okay, let's have a look at some of the other big movers. Liontown Resources closing higher by almost 0.9%. Gina Rinehart has increased her holding in the company to 14.7%. This is interesting because it looks like she wants that bigger say when it comes to that Albemarle potential takeover.
Yeah, and Afterpay owner Block, analysts at Citi have cut their price target for the tech stock to $65 from $90.
We saw Mineral Resources down. It finalised a $1.1 billion US debt offer.
And embattled casino operator the Star Entertainment Group after disclosing that JP Morgan and its affiliates had tipped over the 5% substantial holding line on that one. Looks like the stock is unchanged today.
And Computershare was a little weaker following news that the share registry company is selling its US mortgage services arm to asset manager Rhythm Capital for $720 million. Both Jefferies and Morningstar view the sale as a positive development.
Absolutely, and TPG Telecom has confirmed the exclusive due diligence period granted to Macquarie-backed rival Vocus Group for the $6.3 billion sale of its non-mobile fibre assets has expired.
And that was the stock of the day, TPG, with ticker code TPG. And we had guests Andrew Weiland from DP Wealth Advisory and Henry Jennings from Marcus Today.
I'd certainly be holding on. As I say, the deal makes sense for both parties, for Vocus and TPG. If you wanted to play it in a more conservative way, maybe look at Soul Patts. But I think TPG does hold some allure for investors. So if you held it, I think I'd still be holding it. And you need to be a little patient with these sorts of deals because they are quite complicated.
And TPG really needs to get this deal done because it's got a fair bit of debt that's trying to deal with. So I think it's probably come off too much to sell, but if you're looking for safety and telcos do offer some safety in the market, then you'd probably be more inclined to buy Telstra than TPG. But if you're in TPG at the moment, it is a hold.
And I guess we're pretty sanguine on that one. Now, joining us from Macro Capital is William Symes, I should say. Will, how are you?
Well, how you doing?
Good, good, good. Now, this JOLTS data, that really put the cat amongst the pigeons last night, didn't it?
Yeah, really not adding to the backdrop at the moment. Came in significantly above expectations, an additional 800,000 job openings, and the market's obviously sold off quite a bit on the back of that. So 6 of the last 7 months have seen that data trending downwards, and we've now had a reversal there. And it's really concerning with the strong US macro backdrop that we've already got to contend with. And so I think the key contributor there was professional business services figures, which accounted for over 70% of the increase there. But really goes to show that the labour market is still really quite tight over in the US. And I think that could certainly be a reason to hike further. At the moment, both domestically and in the US, we're pricing in one more hike. But I think with the way that the market is at the moment, there is the possibility that we do see more than what the market's currently pricing in. I think at the very minimum, we do see that higher for longer story continuing to play out. And that'll translate into higher yields, which translates into a higher US dollar and consequently a lower US dollar, Australian dollar, which I think is definitely a concern domestically. I think something that's interesting with that is that in the recent RBA policy statement, there are certainly plenty of factors that could contribute to the RBA being a lot more hawkish, but the policy statement really didn't change from the preceding month, apart from commentary pertaining to elevated oil prices. And so I think whilst the Fed does remain hawkish and currency does continue to weaken, we could see increased pressure on the RBA to hike and follow suit of the Fed. At the moment, we're trading 63 odd cents, getting pretty close to that 62 cent mark, which is, apart from COVID, lows not seen since 2003.
Yeah.
So it's a long time, isn't it?
Yeah, it is. So
you're talking there about those higher bond yields, the impact then to equity markets. I mean, we touched on the fact that our market is at near this 11-month low, and I mentioned as well those tech stocks got hit or whacked in the US too. So what kind of momentum are you seeing? We're still going to be range bound heading into the latter part of the year?
Still quite range bound. We're obviously at the lower bound of the range at the moment. But at the moment, I really don't think there's a whole lot to be particularly optimistic about. We've got a really strong US macro backdrop, whilst yields are pushing higher, rates are pushing higher. There isn't really any clear direction. I was having a chat on the show maybe 2 weeks ago about a potential pullback in that 5 to 10% vicinity. That's now largely played out. Thankfully, we were reasonably cashed up ahead of that. But remaining a little bit more cautious. But as things do start to normalise, probably start to drip feed some capital back in. But pretty directionless at the moment.
Yeah, it is. It's actually quite interesting. I'm just trying to pull up something that I read on FN Arena, and it's quite interesting because technically, if we get, as it was referred to, the tea leaves out, and the S&P 500 at 4,200 is near both a 38.2% Fibonacci retracement of the stock market rally off the October 2022 low, and a 50% retracement off the rally seen off the March low. But it basically means that there's two risks. It can capitulate, and there's also a risk of a bounce.
Tends to be the same any day, right? It can go up or down.
I guess the question is, if we do get a bounce, I mean, should investors still be looking to maybe pull some of the weeds out of the portfolio, get rid of some of those stocks that if we are seeing an economic slowdown on the cards, that maybe you just don't want them in there?
That's certainly what we've done recently after reporting season. We were reasonably active through reporting season, looking for upside surprises, and did quite well with that strategy. Naturally, got a few wrong, and so following that and anticipating a bit of a pullback, we took the opportunity to cut some of those positions short. So at the moment, we're quite positioned. We're positioned accordingly to how we want to be. Have the cash there ready to pick up discounts, but also at the same time protecting against further downside if the market does head further down from here. Looking at a few fixed income instruments as well gives you that stable yield in the event that things do start to normalise and potentially rates do come down lower than anticipated. Given that inverse relationship, should be able to get a cap gain out of a bond ETF as well.
And where are you seeing the movement in commodities? I mean, we're looking at that potential $100 oil move.
Yeah, look, I think that we've obviously got the OPEC meeting today, and anticipation surrounding that is that the output policy is going to remain as it is currently. Saudi Arabia and Russia have obviously committed to maintaining output at present levels until the end of the year. A number of analysts do see oil heading higher up towards that 120 mark. We're flirting around the $90 mark at the moment, staying pretty fixed at those levels. But realistically, I do think there's probably a bit of upside from here, and pushing that $100, maybe even higher than $100 mark as well.
What's going to be on your shopping list if we do have more of a pullback? Because we have seen stocks like CSL. I was chatting to a client earlier. I mean, it really was $246.
Yeah.
I mean, it's back down to 22 times. I mean, those are levels we haven't seen for a long time. So some stocks may have already put in a bottom.
Yeah, well, I've spoken about WiseTech and ResMed a few times on the show, and I think that those two stocks do still offer quite attractive buying opportunities. But again, probably looking to dollar cost average in rather than pick this as the bottom, because there are a number of macro factors that you just can't account for right now. So unfortunately, a little bit directionless, looking to dollar cost average into positions rather than go heavy right now.
Interesting, you mentioned ResMed. I think every single day in the past week we've talked about Ozempic and ResMed and sleep apnea. It's just such a fascinating story because there are so many other facets that can move. You mentioned yesterday Kellogg's.
Yeah, the share price has been falling because of these
People are
weight
eating
loss
less.
drugs. Yeah, I know.
Okay.
Who would have thunk it? And
Really a weak link.
I know.
Interesting.
And then Bloomberg had that story that airlines could actually
save more
on fuel because people would weigh less. So
it's really like you can feel the narrative is just being stretched and stretched and stretched to the
every single person we have had in the past 2 weeks has mentioned ResMed.
I know, but they're all buying it.
Yeah, exactly. As a buy.
But it still seems to be struggling. It's really amazing.
Well, it had a respite bounce and it's drifted back off since then.
Yeah.
Not to its recent lows, but still a bit weak.
I guess with something like this, when you do have such a massive disruption potentially coming to market, it takes time, because overnight I heard the CEO of Microsoft apparently when he was chatting, I think before the Senate or something, or one of those commissions, saying, oh yes, we did talk up AI just a little bit in terms of, getting Copilot off the ground, ChatGPT. So inevitably these narratives in markets really fly, and sometimes they're not quite as impactful or deleterious sometimes on stocks.
That's certainly a really interesting one to watch.
Absolutely. Well, I think the forecasted volume headwind to sleep apnea devices from the GLP-1 drugs is 14% by 2030, whereas ResMed sold off 30-odd%. So it's still certainly an impact, but it's got 7 years for that impact to materialise, and the impact's less than half of what the movement's been. So I certainly think it's been oversold. But interesting to see how it plays out then for weaker links like Kellogg's.
Yeah, all right.
Indeed.
William, thanks so much.
Appreciate
William
it.
Symes from
Cheers.
Macro Capital.
Okay, let's check in and see how some of the leaders in today's trade. And there we have some green on screen, Jules. Isn't this exciting?
3.7%. Get out the party poppers.
Exactly, get out the party poppers, absolutely. And interesting to see that we are seeing some buying going on there. Evolution Mining up 2.6%. Capricorn Metals, I was thinking to myself, I am so not a resources specialist. Need to get more across my resource companies. And so we are looking for Capricorn Metals is a gold company as well, which is quite interesting. Now, Aurora, I think they are tidying up that big acquisition over in Europe.
Yes, on signing that Saverglass share purchase agreement. So I think that's what's behind Aurora. Interesting in that metals space. I know it's not one of the top 5, but Neo Metals also gaining the most in 4 months on lithium recovery results. We know that everybody loves a hot lithium story, but yeah, just getting to Aurora, rising by their 2% on the close, biggest intraday percentage gain since September 19, so really only a month, but says it signed this binding share purchase agreement to acquire Saverglass and adding that completion of the acquisition in the last quarter of 2023. All right, let's have a look at the laggards.
And there we go, core lithium off by 5%, and we've seen quite a lot of volatility in that one. Coronado Global Resources continuing to fall after they had that upgrade, or should I say downgrade, in earnings expectations on a Monday, which of course was a public holiday. And Polynovo, do we know what's going on in that
No, but
one?
I know with Weebit Nano, that was on the back of course, what we saw with some of those tech players in the US.
Loss-making stocks.
Yeah, and I mentioned as well with Block, Analyst City cutting their price target for the tech stocks to 65 from 90 for Block itself, and Weebit kind of got caught up in that sell-off as well. So that was really interesting. That pullback of nearly 5%, and of course, we're just continuing to talk about some of the weakness in these players. But, I think we've spoken nearly every day as well, Danny, about Coronado being one that goes up one day, down the next. So I think it's a very liquid stock too,
very volatile. A lot
yeah.
of the traders, and it's interesting to see that West African Resources is bucking the trend there in the gold stocks, given that we had 3 in the top movers, Ramelius as well, which I was remiss in mentioning was also up. So a very mixed picture there for the gold stocks. Now let's have a look at the small caps and see what's been going on today. Botanics Pharma, I think we interviewed them today, didn't we? Andrew had a chat with them today.
Is that the same one as ECS Botanics?
Oh dear,
that
was your...
Yeah, that was the medicinal cannabis that
one,
we got a bit caught up in. Botanics Pharma, I think we did interview last week though.
Oh, okay.
But up 11%. Let's have a quick look at the laggards as well. Wildcat Resources up 12.5% for
down.
yes. Oh, down. I'm so glad you're here. Especially for our podcast listeners, down.
That's
Red
all right.
means down, Juliet.
Yeah, and
okay.
4D memory is also down, so some profit taking going on, that is for sure. Now, what's going on overnight? And there we go, US factory orders data, the S&P Global and ISM Services PMI, ADP employment report, yet another one, and we have seen some volatility in those employment reports, and Tilray to release earnings, speaking of cannabis, and the EU, the ECB's Christine Lagarde is also speaking. So quite a lot going on.
And then tomorrow we've got the trade balance for August. Remember, China markets remain closed for Golden Week, and we've got a big run up of guests, including, I think Andrew and I were fighting over this one, so we'll see who hosts the big picture tomorrow. But Paul Brennan from Suncorp, always interesting to get his take, and particularly after we had the RBA hold today. Let's get a final check of yesterday. What is wrong with me today?
Okay, let's have a look.
Find
COB
out.
200
Save me,
closing
Danny.
down 10 points. And that's about 0.8%, and looking pretty much the same on the ASX 200, currently down 53 points, closing out at 6890, and that's also about 0.7%. So there we go. Let's have a quick look and see what the little Aussie battler is doing. It did briefly pop under 63 cents today, but has made a bit of a comeback, showing some support at 63.2 against the US 63.15 against the US dollar. And let's have a look and see how the futures are currently trading. And well, unlike yesterday when the futures were up and we ended down, today the minis are down, so who knows what will happen. It'll depend on the mighty bond market yet again.
All right, well, at our last virtual investor event, we asked if you were interested in adding alternatives to your portfolio, and nearly 70% of you said yes. So we're bringing together expert asset allocators to share how they build a portfolio in a space that's traditionally been out of reach for retail investors.
We've also got managers from funds right across the spectrum of alternatives. So join Koshi for Essential Alternatives. It's happening 18th of October from 11 a.m. Eastern Daylight Time, and it's free to register. You can see the full agenda at ausbiz.co/essential. And just a note that a lot of the strategies and products being discussed are only suitable for wholesale or sophisticated investors. Wow, Jules, we made it.
We did. All right, that'll do it for the COB for today. We'll see you tomorrow.
Bye.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.